Hi students, welcome to Sunil's tutorial. I am Sunil Mirwani and today we will be doing this chapter called as process costing. Now before you start the chapter, you have to get the format of the sum ready. Behind me I have put the format of process costing. First you rule the sum this way, get the format ready and then you start reading the sum. I'll just show you how the format is made. Right? You generally have three processes. So you will have a process account. The ruling of this will be similar to that of a ledger account. Particulars, units, rupees, particulars, units, rupees. There are some authors and some professors who say that the ruling should be particulars, units, CPU, rupees, particulars, units, CPU, rupees. If in your college your professor is telling you that, you can do it that way. Either way it is the same. So you have process 1, process 2, process 3. All three are going to be identical. Particulars, units, rupees, particulars, units, rupees. Process 1, 2 and 3. Now while doing this sum, it is always advisable to take a double page. So on the left side of the page, you will make the three process accounts. On the right side of the page, you have to make working note. For each of the process, you are going to have a working note. The working note is going to consist of total cost, normal loss, expected output, abnormal, actual output. Right? So you write this for all the three processes, and in terms of amount column again you will have units and rupees. Right? So these are the things that you have to keep ready before you start the sum. So what I want you all to do is rule the sum this way before we start with the sum. Get the ruling ready. Only if the ruling is ready will you be able to comfortably do the sum. Okay? Now I hope you've done the ruling ready. You've done the ruling. Let's see a sum. I'm doing question number 6 on page number is going to change. I'll write the name of the company. Just write this process one down here. I'm doing question number 6 in the books of a product process. Okay, there are no books also. Okay, we're doing question number 6. Now they've given you that a product is manufactured after it passes through 3 distinct processes. The following information is obtained from the records of a company for the year ending 31st December 2003. They've given you direct material for process 1, 2 and 3. Debit, expenses and losses. So you will have 2 direct material. For process 1 they've given you is 2500. Leave first line and write the entry. Same way, leave the first line and write the entry. Direct material. Direct material for process 2 is given to you as 2000. 2 direct material. For process 3 is given to you as 3000. Next, 2 direct wages. 2 direct wages. For process 1 is given to you as 2000. 2 direct wages. For process 2 is given to you as 3000. 2 direct wages. For process 3 is given to you as 4000. Okay. Next, production overheads are 9000. They have not told me in what ratio I have to divide it amongst the 3 processes, so I will not record this right now. 1000 units of rupees 5 are introduced in process 1. 2 units introduced. 1000 units have been introduced. The cost of each unit is 5 rupees. 1000 into 5, 5000 rupees. So that's my units introduced. There is no stock of material or work in progress at the beginning or end of the year. The output of each process passes directly to the next process and finally to the finished stock. Production overheads are recovered 100% of direct wages. Production overheads are 100% of direct wages. That means whatever is my direct wages, my production overheads will also be the same. So 2 production overheads is going to be the same as your direct wages. Since your direct wages was 2000, production overheads will also be 2000. 2 production overheads. Here it is going to be same as your direct wages figure, 3000. 2 production overheads, same as your direct wages figure, 4000. Fine. Now, once this is done, your half your work is done. Now you move on to the working note. Right? Now let's see this. Before we move on, 5, 7, 9, 11, 11,500. So my total cost, guys, see this working note. Units are 1000 and total cost is 11,500. How did I get this? Guys, I'll show you this once again. Units are 1000 and total cost is the addition of all of this. So 5, 7, 9, 11, 11,500. Now, let's see the sum. They've given you process 1, percentage of normal loss to input. If you read the sum below that, they've given you that normal loss is 5%. Normal loss is given to you as 5%. You calculate 5% on the number of units. So 5% on 1000 is going to be 50. 5% on 1000 is going to be 50. So your normal loss is going to be 50. Normal loss is always to be calculated at the rate of scrap. This is always to be calculated at the rate of scrap. The scrap value is for process 1 is given to you as 3 rupees. So 50 into 3, 150. Subtract this. When you subtract this, this is 950. This is 11,350. Right? Do we get this in here? Now, what you have to do is divide rupees by unit. When you divide rupees by unit, you will get CPU, which is going to be 11.95. When you divide this, you will get CPU, which is going to be 11.95. Now, the sum says that the actual output is also 950. Since the expected output and the actual output have the same number of units, you will bring the figure down. Right? Once your working note is over, you start recording here by normal loss. Normal loss is 50 and 150, right? Then by actual output, what you have is going to be recorded as the next process. So by process 2 is going to be 950 and 11,350. Fine, do we get this in here? So that's how you do the record. Once you've recorded the entries, tally this out. This is going to be 1,000, this is 11,500. Same way, this is going to be 1,000 and 11,500. Right? When you transfer from process 1 to process 2, you will have to switch side. This is process 2. When it comes here, this will become 2 process 1. 950 and 11,350. Fine, do we get this in here? Now, 11,350 plus 2, 13 and 6, 19,350. Right? So if I add this, this is 950 and this is going to be 19,350. So total cost is 950 units at 19,350. Fine, do we get this thing clear? Now, my normal loss is given as 10%. You calculate 10% of the units. 950 is the number of units. 10% of that will be 95. Right? At the rate of CPU. CPU is given to you as 5 rupees. 95 into 5 will give you 475. Subtract this. So this is going to be 855. This is 5 4, 7. This becomes 2, so 12, 8, 8, 18,875, 855 and 18,875. Now, let's see the actual output. They've given you that the actual output is 840. The actual output is 840. Now before that I need to get the CPU. How do I get CPU? CPU is rupees divided by units. So that is 18,875 divided by 855, which should come to 22.07. Okay. Now the actual output is given to you as 840. Expected output was 855. Your actual output is 840. You were expecting 855, you got 840. That means you have incurred an abnormal loss. You have incurred an abnormal loss of 15 units. You should have got 855 units. Instead of that, you got 840 units. So you've incurred an abnormal loss of 15 units. Abnormal loss is always calculated at the rate of CPU. CPU you have found out is 22.07. So 15 into 22.07 will give you 331. Right? Subtract this. When you subtract this, this will give you 18,544. 18,544. Once you've done this, transfer this here. So this is going to be by normal loss. Normal loss is 95 units, 475 by abnormal loss. Abnormal loss is 15 units, 331. Actual output will be written as the next process. So by process 3, 840 and 18,544. Tally this. When you tally this, this is going to be 950 and this is 19,350. This is going to be 950 and 19,350. Once you've done this, whatever is the output of process 2 will be transferred to process 3. So you will write this as process 2, 840 and 18,544. Right? Now let's do this addition. When I add this, 18,000 plus 8, 26, 26 plus 3, 29. So this is going to be 29,544. 18 and 8 is 26, 26 and 3 is 29. So this is going to be 840 units and 29,544. Fine. Now let's see the normal loss. They've given you that normal loss is 15%. So I'll have to calculate 15% of 840. 15% of 840 is going to be 126. 15% of 840 is going to be 126 at the rate of scrap. Scrap value is given to you as 5 rupees. 126 into 5 is 630. Right? Subtract this, so this will be 4, 3 minus 2 is 1, 7, 714, this is 4, 1, this is going to be 9, 8, 28,914, right? Get the CPU. How do you get CPU? CPU is rupees divided by units. So when you divide this, this will come to 40.49, right? Let us check the actual output. The actual output is given to you in the sum as 750 units. The actual output is given to you as 750 units. You were expecting 714 units. Instead you got 750 units. Right? That means there is an abnormal gain. You have to add abnormal gain. Like how you subtract abnormal loss, you add abnormal gain. So this is 20 and 50, 36 units. like abnormal loss, abnormal gain is also calculated at the rate of CPU. My CPU is 40.9, so my abnormal gain will be 36 into 40.9, which is 1458. Right? 12, 5, 6, 7, 9, 13, 8, 9, 10, 30,372. Transfer this. This is going to be by normal loss. Normal loss is 126 units, 630. Abnormal gain is to be written on the debit side. So 2 abnormal gain. Abnormal gain is given to you as 36 units, 1458. Right? The final output of the final process, since it is not going to be transferred to any other process, is to be written as by finished stock, which is 750 and 30,372. Right? Tally this. When you tally this, this will come to 31,002. And this is going to be 750, no, this is 840, 876, 876 and 31002, right? This finishes the 3 processes. Once your process accounts are over, then this is generally asked. Now in some of the sums, they will ask you, besides this, they will ask you to make normal loss, abnormal loss, normal gain, normal loss, abnormal loss, and costing P&L account. Let's see how do we make this. First, let us see how do we make an abnormal loss account. The ruling remains the same, that is particulars, units, rupees, particulars, units, rupees. Right? Now I had abnormal loss in process number 2. In process 2, my abnormal loss was 15 units and the cost of abnormal loss was 331. When you transfer from process 2 to abnormal loss, you have to switch side. Here it was on the credit side, so in abnormal loss account it will come on the debit side. To process 2 is 15 and 331. Right? How do I tally this account? On the credit side, write by bank. Write the number of units as it is. If there were 15 units here, you will write same 15 units on the other side. This has to be at the rate of scrap. Right? Now the scrap value for process 2 was 5. 15 5s are 75. I've multiplied 15 by scrap value. Tally this. When you tally this, this will be 15 and 331. 15 and 331. Right? The difference is to be written as by costing P&L. So this is going to be nil and this is going to be 256. That's my abnormal loss account. Very simple. Just transfer the account on the other side and tally it with scrap. Next, you have to make abnormal gain account. Ruling remains the same. Particulars, units, rupees, particulars, units, rupees. Right? Now, let's see where do we have abnormal gain. We have abnormal gain in process 3. When you transfer from one ledger to another ledger, you have to switch sides. This is on the debit side. When you transfer there, it will go on the credit side. So this will be by process 3. This is 36 and 1458. Right? How do I tally this? To tally this on the debit side, you will write 2 normal loss. Please pay attention here. You will write this as 2 normal loss. You will write the number of units as it is. At 36 units there, I am writing 36 units here. This will also be at the rate of scrap. Now the scrap for process 3 was 5 rupees. 36 into 5 is 180. Tally this. This is 36 and 1458. This is going to be 36 and 1458. Right? This is going to be 2 costing P&L. Nil, and this difference will be 1278. Right? So that's how you make your abnormal loss and abnormal gain account. Now besides this, you have to make a normal loss and costing P&L account. Let's see this. Let's make a normal loss account. I'll make it here. Particulars, units, rupees, particulars, units, rupees. Right? Now let's see this. Where all did we have normal loss? We had normal loss in all the 3 processes. All the normal losses on the credit side. So when I bring this down, this will be 2 process 1 is normal loss is 50 and 150. Process 2 is 95 and 475. Process 3 is 126 and 630. In abnormal gain also you had a normal loss. In abnormal gain also you had a normal loss, 36 units and 180. This is on the debit side, it will go there on the credit side. This is going to be by abnormal gain. Abnormal gain is 36 and 180. Tally this account. 5, 10, 15, carry over 1, 10, 11, 12. 6 and 5, 11, carry over 1, 10, 15, 17, 271. So this is 271, 1255. The difference is to be written as by bank. This is going to be your balancing figure. Right? 6 plus 5, 11, carry over 1, 4, 5, 6, 7, 235. Right? And this is going to be 5, 8 and 7, 15, carry over 1, 2, 0, 1, 0, 7, 5. Finally get this. So this is how you make a normal loss account. Then the last account that you have to make in this is called as costing P&L. Right? This is particulars, rupees, particulars, rupees. Right? How do I make costing P&L? Now, you have costing P&L in your abnormal loss account on the credit side. All of you please see your abnormal loss account on the credit side. You have written costing P&L. That will come here on the debit side as 2 abnormal loss. Amount is 256. And you have costing P&L in the abnormal gain account on the debit side, which will come here on the credit side as by abnormal gain, which is 1278. Carry this. 1278, 1278, 6, 7, 8, 5, 6, 7, 0. This is 2 net profit. This finishes the sum. Right? We will stop here for the day. Thank you very much.